good. How are you, Scott?
I'm doing good. Thank you. You know, you were with us last on March 23rd, which happened to be the low in the stock market. You said then this could be near a bottom. You also said that you were, quote, nibbling, and that it was time to buy a little if you were a longer-term investor. Are you surprised how far we've come and how quickly we've gone there since that day?
Yeah. Yeah, I mean, it's been a bigger move than I thought it was going to be, for sure. But I was, look, I mean, there's been a lot of Fed action and a lot of government packages since that day and on that day and since that day. And, you know, a lot of that probably moved the market than it has the real economy up to this point. So, you know, those things happen. Now the question is, what's the right value for the market now?
Well, that's an interesting question. Your friend, Stan Druckenmiller, yesterday said that this was the worst. The risk reward for stocks was maybe as bad as he's seen it in his career. He's had a long career, David. So do you feel the same way that Stanley does? How would you put this into context now as to what the right valuation for the market is?
Since Stan's much older than me, he's had a longer career. So, anyways, but yeah, listen, I think I don't know. It's definitely as of yesterday. You know, the market's down from yesterday. I would say that 99 was more overvalued, 99 2000, but. Yeah, I would say it's one of the most overvalued markets, maybe the second most overvalued I've ever seen at that day. I thought if you talked to me yesterday, I would have said before the market went down, it would have been 15% down and 5% up type market. So now we've come down a little bit in the last 2 days, but still, I mean that would probably mean it's a little bit different risk rewards, but. It's, the market is pretty high, and the Fed's put a lot of money in here, and it's a question, has there been different misallocations of capital in the markets? And certainly you're seeing pockets of that now in the stock market. And the market is, by anybody's standards, pretty full. But then again, it's there's a lot of liquidity there, and the Fed's still there. So, I'm not going to, it's too hard to say that the market can't go up or something like that, but it's not a very good risk-reward market.
Yeah.
Say that.
You're in a position, obviously, where you don't have to do anything in the market. But how does your view today reflect how your positioning looks today?
Well, listen, I think when we were talking back in March, we probably brought it up. We've been relatively conservative, since, probably January. I think that we probably bought our positions up to, above 50% in equities, and now I would say that we're probably more towards the 10-15% level of long in equities. So not short, but not very guarded, I would say.
Mm-hmm. When people ask you, and you sort of alluded to this, and we raise this issue all the time, and we get asked the same questions, I'm sure, that you do. How can the stock market, David, be where it is if the economy is where it is? Is it as simple as the Fed and Washington and the amount of money that has been put into the system? And does all of that put a floor under stocks to some respect?
Well, it doesn't put a floor in the individual stocks, so depending where sector you're in. Now, banks are down a lot today. And listen, if you're sitting at zero interest rates with this sort of economy with loan losses in front of you, that sector is down today. May still be too high if you look where it was when there were zero interest rates before in this world. On the other hand, some of the tech stocks like an Amazon may be not that overvalued if you looked at what was before. Look, we went back and we looked at it, back in 99 just to get a gauge of it. And in 99, at, sort of the peak, the forward earnings were 24 handle for the S&P and maybe 70 some handle for the NASDAQ. And I think yesterday those numbers are probably 23 for the S&P, pretty high, by the way. And, for the NASDAQ, it was probably in the 30s, low 30s. So not that, so it's, not that I'm saying the NASDAQ is cheap by any stretch like that at that valuation, but I'm just saying the overvaluation. That's why I say 99 was more. Where you're having pockets is there's some crazy pockets though that of misallocation. I mean, there's SPACs that are the blind pools that were trading at crazy level because they're taking over the company, not to mention any individual names. But are some of the NASDAQ individual names are just nuts. What happened and too much liquidity thrown in. It seems like people getting caught in sort of a frenzy in this environment is especially crazy. And so there's definitely some misvalued companies out there. And by the way, you do have some of the old economy companies, if you say the banks and some of these other sectors. I mean, they're, like I said, it's down today. Maybe they should be lower. I mean, you can make arguments. If you're zero rates for, like the Fed said, for 4 or 5 years, it's very difficult to make money there, and you have the loan losses. So, I mean, it's a market of stocks. And I do think, though, that, as I said, I think you're somewhat overvalued, but, it's hard to say, that doesn't mean you still can't go up, but as I said, I don't believe it's a great risk reward.
You happen to own many of the stocks that have done well, whether it's the Googles or the Amazons, which you were just speaking with, and the question becomes, as you've watched these stocks go up almost unabated, it's really been amazing how long that can continue, to what point those individual names are fully valued or become overvalued. Even in an environment, David, where we know that those are the ones that are going to do well, not only now, but on the other side of this, how do you think about those names that you own specifically?
Scott, I have to tell you the truth. There's some days I wake up and say, why am I, if it was nicer outside, I'd go golfing. Okay, I mean, the fact that some of those names may not be tremendously overvalued doesn't mean they're not full. And, there's different things that can be happening in the economy that can make them, worse. I mean, certainly, Amazon's a perfectly positioned company. It doesn't mean it's not fully valued either here. And, some of the other names you mentioned, if you're talking about a Google or Facebook or something, they're advertising companies. So, we're cognizant of them, but they're not, they have a lower multiple, and they look like, again, that they're not, rich, but they may be full, fully valued. So, that's, you're getting that sort of thing. And some of those, and then you have individual stocks. And I don't want to, mention smaller individual stocks because they'll move. But people have to be very careful about some of these smaller NASDAQ names that are just nuts. Just so ridiculously 99 type overvalued sort of names.
Are you, I know you don't want to mention specific names. Are you, if we said they were a basket, if you will, of some of these so-called virus stocks? I think people can surmise perhaps what you're talking about.
I'm not talking about virus stocks per se. I'm just taking just general some individual parts of the NASDAQ that are just some individual names. I'm not specifically mentioning a virus stock. And quite frankly, listen, if you thought that there had to be, instead of 30 million tests a month, 30 million tests a day, there's some things for testing companies could be, you could say they're cheap, and maybe there should be 30 million tests a day to really open up this country fully if we don't have a vaccine. So I'm not going to comment on that. I don't know those names. I have looked at a couple things. Like I said, there's a few blind pools out there that, people have been invested in that went too high.
And maybe I should have been more specific. I guess I'm talking about the likes. I'll say some of the names. You don't have to. But the ones that we've seen really go up a lot, that a lot of people have piled a lot of money into, the Pelotons of the world and the Zooms, those so-called stocks, I mention them as virus stocks in terms of the ones that have done really well. Yeah. My apologies. I should have been more specific in the way that I asked that question.
Yeah, look, I don't know Peloton's numbers, but some of those stocks, and I'm not saying those specifically, have gone a little bit too high. And listen, people have to be very careful and do analysis. I don't think there's in some cases, a lot of good analysis being done out there for states of the economy in the future. This is it's a question of what you think is going to happen. This virus or this situation is not going to last forever, ever at this state. On the other hand, it doesn't mean that, we get a lot better. Just, you ask an overall stock market question. With these virus stocks, it doesn't mean that people aren't going to go outside and, and put. I don't know how Peloton will. So I look outside, and I'm like, again, I don't know the numbers of Peloton, so I hate to talk about it, but I'd rather walk outside today.
Do you feel comfortable and confident that the bottom is in, that we're not going to go back and retest that because of the actions of the Fed and the Congress?
Yeah, I think that, that the bottom is in. I think probably if the situation remains, if we're just dealing with a virus and there's no other issues that come up. I mean, there is an election coming up. There can be, that we'll have to deal with it. The tax rates are going to stay the same depending on who gets elected. That has to be involved in that the market has to deal with as far as regulation and other things depending on who gets elected. That may affect the market valuation. We have to make sure that, with China and such, the rhetoric doesn't get to such a heated level that it's a war or something like that. But if you're just talking about we're in this sort of phase and trying to figure out the virus and, how things get better or, how slow it recovers afterwards. I think, there might, in that respect, there might have been a bottom put in. That doesn't mean there's not, you can't fall significantly from these levels.
You mentioned the banks, for example, with rates being as low as they are and taking a look and trying to make an investment decision, as some of our viewers are undoubtedly doing, looking for value and maybe some of the cyclical names that they're trying to look at now that have lagged some of the higher growth stocks. Is there a point where you look at an airline stock, David, which you used to invest in, or a bank, and you say that some of these values are worth taking a shot at here?
Listen, airlines, as long as the middle seat is open, which it should be, are difficult stocks. They're difficult, and I don't think you can count on more pure giveaways from the government in that sector. It's kind of was interesting. The government chose to give money to those particular companies. That way they did. I'm not saying they shouldn't have supported them. I probably would have supported them, with a huge facility in bankruptcy, so they would continue operating and not worry about the shareholders or the bondholders, but just make sure the airlines run. But this is a little bit tricky right now as far as some of that stuff right now, as far as the money they give away. As far as so it depends. That's a tough sector right now, the equity, I think. Listen, if the world turns around, there's a vaccine tomorrow. That changes, okay? As far as the banks are concerned, listen, I want to be invested in the banks at some point. As I said, my problem is if you think there's a long period of zero interest rates coming up, they're just trading, forgetting about the loan losses themselves. If people look for that long, where these stocks were trading when you had these long period of zero interest rates in the past, in the near past, and probably, I'm talking about the years from, more or less 11 to 16. You would not be looking so fast at those banks. I'm not saying they're tremendously overvalued. They're just tough investments. And I have to worry about loan losses also, and the general economy. So if the Fed is going to be, it's one of those funny sectors. If the Fed keeps these rates at zero or near zero, it's for multiple years. It's just it's a little bit tougher to make money, and that's for those companies. And there's still something called earnings out there that you have to have. So.
How are you thinking about the reopen in general? And by the way, I want our viewers to know, you've given millions of dollars, by the way, to coronavirus relief. I think you should be commended for that, for stepping up and urging people of, maybe not exactly of your means fully, but certainly close to it to do the same. But how are you thinking about the reopen and how it's going to go?
Look, I would wish, like I said, I think a few minutes ago, I wish there was more tests so it could be smoother. But look, until there's a vaccine or a tremendous amount of tests available, it seems to me that we're in this 25 to 50% type world for a lot of the services that we all have come to depend on. And I think that, I'm a proponent of some sort of social distancing. When that you should open things with some sort of social distancing, whether that's 25% capacity in restaurants or 50% capacity, in some sort of distance, and maybe a little bit less distance in open air than it is in inside spaces. I just think you're supposed to try to open up and do that with masks or whatever, and so now if we open up that way and it's a long time, this people are going to be disappointed on how what numbers look like, and I think that's what you mentioned, Stan, before. I think Stan's looking at that and saying people are too optimistic about the V. I think people are talking about the Nike whoosh more as a possible trajectory for the economy, and that might be right. Mm-hmm. Again, it's going to be, some people will say testing, and I think that's, if you had it on your phone that you got tested in the morning, and then you could see that every day or any day you wanted to go to a restaurant that you were tested, then the restaurants could run at higher capacity numbers. That's why I say testing, or other sort of venues, so you could have big venues again that are fully open. If you could go to the door, scan your phone like you do a ticket, and see that you were tested this morning and you're fine, and go in. Mm-hmm. Or something, or even if you may still be required to wear a mask or not, but you don't have it. So I don't know if we're not, don't seem to be close to that point yet, but at some point we will be. So. And then the question of vaccine, obviously. So if you get a vaccine, and the problem with vaccine is to make so many doses. I don't know, second quarter next year, maybe, if we're lucky. It's just a lot of the logistics of the doses. When people really have to do the numbers and the analysis of what it takes to make those doses, and the logistics to have enough doses to make a difference, it's going to take a bit of time, even if you get the right vaccine. So people have to be realistic about how they do numbers. Mm-hmm. It's just it's analysis. They have to make sure they get the right analysis on timing of different things. And like I said, if we could do, instead of 30 million tests a month, if you could do 30 million tests a day, now you're talking.
So as we're talking about testing, we're talking about the reopen, masks, and you even...
The tests at work, that you reliable tests I'm speaking about.
Sure, of course. And you're going to need that if we're going to play football this year. You are, of course, the owner of the Carolina Panthers. We're dying for football, David. You know people are. Are we going to play football this year, do you think?
Well, the NFL put out their schedule, and, it's not so hard to, test the people that will be, if you, the question, you're not asking me if you're playing football, because they're talking about playing baseball in July, right? So is that, I think, whether they can do it with a labor agreement. So you're really asking, what are you really asking? Whether we'll be able to play football on an empty stadiums, or are you asking, will stadiums be filled, or which part of the question are you asking me?
I'm asking if we're going to play, period. I'd be surprised, frankly, if you're asking my own opinion, if we have fans in the stands, if we're going to play in the fall. Maybe we will in some capacity, but you would know better than me. Are we going to even play football under any circumstances this year, do you think?
Well, I think if baseball comes and you see them playing soccer in Europe, and we're scheduled for football, I think there should be enough tests available to make sure that we're safe on the field. As far as fans on the stadium, if anybody's comfortable going into, you won't be having full stadiums, but that doesn't mean you can't have some fans in the stadium either. If you're comfortable being in a closed airplane for a cross-country trip, 18 inches apart, maybe with 2 seats in between you and being 5 feet away from each other, you might be comfortable in an open-air stadium? Maybe, right? Or if you're going to, are you going to a restaurant 6 feet apart? Are you okay with a 6 feet apart in an open-air stadium? It's practical. People have to, again, it's analysis on what makes sense, and not get, if that's what it is, if you think that you can be closer, and if you have everybody wear a mask in a stadium, well, maybe it can be, a little bit closer than that. Maybe it can be 3 feet away if you have masks, or 3.5 feet away, or whatever the number is with masks. I'm sure you've seen some of the simulations with masks or no masks, and how people can be. So, and everybody in an airplane is, as I was saying, they're not 3-4 feet away on an airplane. So, listen, it's a question of what's practical, what makes sense, some sort of distancing. where tests, you know, what opens, what doesn't open. Football, as far as the stadium and the fans, you know, there should be some amount of fans in the stadiums, depending on what, you know, locale and where you are and what the local rules are. I mean, there could possibly be. So, yeah, I mean, listen, the schedule's out. When is you're a Washington Redskins fan?
That's right.
Yeah.
That's right.
Who's your first game?
Philadelphia Eagles.
Are you going to win?
Of course.
Okay.
Question
Somehow
is
I knew the answer. See, I wish I knew the rest of your answers as sure as I knew the answer you were going to give on that one.
Hey, I think we play you guys this year. We're going to win that one, too.
Yeah. Well, there may be some dispute on that point, but that's the 15th game of the year, so we'll see what happens.
Yeah, we will. Let's. I know you got to run. Let's leave it on that note. I wish you the best. Thank you for being on today. I appreciate it so much.